Hi everyone, let's go over my low time frame Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we've been looking for a three-wave zigzag in an ABC, after which you now expect continuation to the upside. In this scenario, the ABC is a 5-3-5 structure, which still feels a little bit alternative for me, mainly because this wave C extended all the way to the 1.618, taken from the high to the low of A to the high of B with the trend-based Fib extension tool. And also this wave C is 3.5 times longer in time compared to wave A. And yes, wave C is usually longer than a wave A, but I'd be looking for like between the 1-to-1 and the 1.618, maybe the 2 Fib time as well, but the 3.5 is very long. But in this structure, this wave C and then a 5-wave move over here is finished, and now we would be looking for upside, where the potential upside structure can be a 1-2-1-2 scenario. So over here we then have a wave 1 to the upside, followed by a 3-wave 2, which then retraced to the 0.5 Fibonacci, taken from the low of C to the high of 1, which is a common target for a wave 2, so that is nice. Then we have another 5-wave structure over here, and then a second wave 1, which is then part of the bigger wave 3, and then expecting another 3-wave corrective structure in then a wave 2, where the rare target is the 382, which price has already been raging on top. But the most common target for a wave 2 is between the 0.5 and the 0.786, which is between 27.1k and 26.9k. And the invalidation of this scenario is if price is going to take this low, because this wave 2 over here is not allowed to take the low of the higher degree wave 2, after which then, if this wave 2 is finished, you expect a continuation, a big push towards the upside, where at least for now I have here over here two resistance areas. The first one is between 27.7k and 27.8k with a bit of resistance. We have the golden pocket over here, taken from the high to the low of C, as well as the point of control of this range. And just above we have another resistance area between 28k and 28.1k. If we then go to the more bearish scenario, then we are looking for an impulsive structure to the downside. So now this is a wave 1, 2, then we have a wave 3, corrective structure in the 4, and then eventually a wave 5 expecting to the downside. Because price moved to the upside over here compared to yesterday, so because price now took these highs, we now have to think about this wave 4 being more of a complex structure, and then potentially a 3-wave in a W, 3-wave in an X, and then somehow a 3-wave in a Y, even though it looks 5-wavy over here. But there's not really any other great solution to count this, or you have to think about maybe the end of 3 being here and then an A, B, C move. But the problem with this is that the second leg of the wave C is very short and didn't even hit the rare target for a wave C. If this is an A, B, and then a wave C, the 0.618 is a rare target for a wave C, and as you can see, price didn't even hit the rare target. So for me, that is unlikely, so that's why I have a WXY on my chart over here. It's not the most likely scenario at the moment compared to the two impulses that I will share, but nonetheless, this wave 4 is not yet invalidated, as price didn't close higher time frame candles like 15, 30, 1 hour time frame candles above the 0.5, and the real invalidation is hitting the lows of this wave 1, because a wave 4 is not allowed to have overlap with a wave 1 in an impulsive structure. So if this impulse is not yet finished, you don't want to see price hitting the invalidation at 27.5k. So here we then expect a move towards the downside, where the wave 5 targets are actually quite nice all together in this particular scenario, where the most common target for wave 5 is between the 1.236 and the 1.618, which also includes the target box over here at the bottom, which is between 26.2k and 26.3k. So if price would fall to the downside, then this is definitely an area of interest for then a potential bounce towards the upside. And what is also important is that if this is a zigzag and then a 5-wave move to the downside, a zigzag can never be a standalone structure. It always needs another zigzag to accompany the first structure, right? So if this is a 5-wave move, you're looking for a 3-wave move towards the upside and then a 5-wave move to the downside. And the invalidation is if price is going to take this high, because if this is a 5-wave move to the downside, you want to see more downside to come and not price taking this high. If we go to the second impulsive structure, the impulse is already finished. So in this structure, we then have a 1, 2, 3, sideways 4, WXY, and then a wave 5 towards the downside, where now you're then looking for upside again. And the upside over here can be similar to what we have shown in wave C, so the ABC scenario, where we're then looking for a 1-2-1-2 scenario and then a bigger push towards the upside in a wave 3. However, if this is a 1-2-1-2 scenario and you expect a bigger 3 to the upside, we might get in trouble with the invalidation level, because a 1-2-1-2 is very bullish and then a bigger 3 towards the upside, 4-5-4-5. You don't want to see this invalidation being hit if this is an impulsive structure. So having a 1-2-1-2 over here might mean that the retracement is going to get very, very high, because a 1-2-1-2 means we're going to get a 5-wave structure and then a bigger wave 1, 2, let's say a 3, 4, 5. But then if this is a 5-wave move by itself, you again expect a corrective structure which has to go really deep for the second 5-wave to not take the invalidation, and then a zigzag corrective structure. So we then have a 5-wave move over here, then we have a zigzag 5-3-5 correction, and then another continuation to the downside. So if this is on the lower time frames a 1-2-1-2, then the chances this is actually a 5-3-5 move are going to be lower, like the probabilities, right? Because of the impulsive structure of a potential 1-2-1-2 in this scenario. And if we do look at the CVD, then we still have those bullish CVD divergences between over here, the low, higher low on price, but a lower low on the CVD, where the target is 28.5k. So that is quite interesting, that if this is an impulsive structure and you expect eventually a bit more downside, it doesn't have to take this low, because that's the invalidation of the CVD divergences, is taking this low over here. It doesn't have to go all the way. It can also be a 5, 3 to around here, and then another 5, and then hitting that blue target box down here for then eventually a bounce towards the upside again. That's also possible, of course, but it is interesting. We do have bullish divergences where we have that target at 28.5k, and if I show you this on the AGGR chart over here and we zoom out a little bit, then you can see as well that over here we then have a higher low on price, but on the yellow line as well as the blue line, and you can still see the blue line is still having bullish divergences, higher low on price, lower low on the yellow and the blue line. Of course, the yellow line now moved towards the upside, but initially when price was down here, you can see the yellow wicks at the downside being below the low of this yellow part of the line, right? So a higher low on price, lower low on both of the CVDs, which means we have basically a double bullish divergence on both the Bybit platform, because the yellow line is specifically for Bybit and the blue line is an aggregated CVD line of all the different platforms. So it's quite interesting, and yeah, one time the other one plays out, other times the other one plays out, but now we have a double bullish divergence, which is interesting. Now CVD can be leading, meaning that price will follow the CVD to the downside, but we have to wait and see. If we then look locally, then over here in a potential like bullish scenario, right, move up, down, again a move up, market structure change, maybe a move down again. What can be interesting is if price is going to create a 3-wave corrective structure to the downside, that we maybe get some bullish divergences with this low over here. So at the moment they are not there yet, right? If we look at the yellow line over here, then at the moment this yellow line is still higher. We don't have a lower low on the yellow line, and neither do we have a lower low on the blue CVD line. But if price is going to correct a little bit deeper, the lines might fall and we might create another higher low on price, lower low on the yellow, maybe also the blue CVD, which then is a bullish divergence for then potentially an interesting long opportunity. We have to wait and see how that of course pans out. So yeah, it's going to be a very, very interesting weekend. Weekends usually are like rangy, but hey, maybe we are not going to have a range weekend. Who knows? I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. Now thanks for watching and subscribing, and I will see you at the next one. Bye bye.